Hey, everybody, welcome to this week. And what a week it has been. It's good to be back once again onto the live stream as we do what we do every single Sunday. Hopefully, you guys are all having a fantastic weekend. Big shout out to everybody who's watching this on the replay. We'll hit you guys first this week instead while people are still roaming on in. So, huge thank you to all of you guys who watched this on the replay because, we have ourselves. There we go. Just needed to mute a tab. Because I can't have all of the functions that I need, I have my other page, my YouTube open on the other screen. I just forgot to mute it this time. So that's on me. Anyway, big shout out, big thank you to everybody who watched this on the replay. About 75% of my total viewership comes from the replay. So you guys are huge. Thank you so much. And of course, a huge thank you for those of you who are here right now, the live crew. And we'll start off. We have Enid just before I dropped in saying waiting patiently and then good afternoon. We got Jill in the house. Hello, Jill. We've got Andrew in the house. Hello to Andrew. And we've got Wayne Smith in the house. Howdy doody. Yeah, there we go. Howdy doody. Anyway, we'll do this good. We have Lisa in the house testing me to make sure I still remember her name. We've got Muggsy in the house going, hey, everybody. And we've got Bleak784 in the house. Hello, Bleak. It is great to see you guys. Yay. All right. Whew. There was a whole bunch of you that all just sort of popped in all at once. So that was kind of fantastic. Lisa's happy I remembered her name. We have Fahad in the house saying hello and Stan is saying hi. Awesome. Whew. All right. So we got a little bit of news this week. We're going to go through, of course. The market, for those of you watching the market this week, is kind of not the best week in the world out there, but let's hope. Well, here's the thing. Summer does typically tend to have not bad markets. Now, last year, the market did get better in August. So far, we're still waiting for that. The last week, I don't think was very good. And we got some interesting data that came in as well. And we're going to talk a little bit about that in a little bit. Before we do, I want to give a shout out, of course, to Blossom. Those of you who don't know yet about Blossom, well, heck, just give me a second here. Well, I'm going to drop you guys a link here to Blossom. Whoops, that's not what I wanted to do. All right, here we go. I'm dropping you guys a link over here to Blossom. So if you have not visited Blossom yet, then do so. Do so immediately. Well, maybe do so after the show. Anyway, Blossom is a social media app. It is for social media. No, it's of course for social media, but it is for investors, Canadian investors in particular. So a lot of the Canadian YouTube finance YouTubers were all over there. So you can get over there, you can pick our brains, you can talk to like-minded professionals, like-minded investors, a lot of do-it-yourselfers there, lots of great ideas, and there's never a shortage of ideas over on Blossom. So once again, if you have not yet checked out Blossom, just do so through that link. Sign up, get yourself in there. You can hook up your portfolio if you want to. And right now, it's one of those ways, if you go over there, you can see what's in my portfolio, which is kind of cool. Speaking of portfolios, though, it only shows you my Wealth Simple. I also have that National Bank one for the 0 to 100K challenge that I have running. So, of course, our next video on that is at, well, basically it's a once a month video as I drop in $400 every month as we build that up. So that next video will be around September 1st. I don't know the exact schedule. If you want to see the exact schedule, check out my Facebook. Over on Facebook, we have a private group for Mountain Finance, and I keep the schedule there so you guys can find out when things are coming down the pipe, at least the things I've got scheduled so far. Okay. Whew. It seems like I said a lot there. Abelish has come in. Hi. It's always fun. All right, let's jump into that first story. Just woo. There we go. Wrong button. There we go. All right. So I did a deep dive last week on Algonquin. And here's the funny thing about it. I was predicting things might get worse in that deep dive, and they have. That's, it's actually very funny. You guys voted Algonquin because those of you who are new to the channel, in the community tab every week, I throw up some companies for you guys to vote which one I do a deep dive on. Algonquin won. So that deep dive, now for having it out on Friday, I actually write my script on Wednesday, film and edit it on Thursday. So I had not had the opportunity to see what was going to happen. So since then, they had their earnings call, and Algonquin has announced that they're selling off the renewable energy side of their business. So this means that they're going to basically be, what's left over is going to be a pure regulated power utility company. So that's not great, to be very honest. As it is, Algonquin has had a lot of issues in the last year. We've seen their stocks fall 43%. We've seen a massive dividend cut. In addition to that, they've dropped the ball big time, and this move is basically them selling off assets to try to get themselves out of the hole that they have created. So I'm at a point right now, before their big stock price, before they had their big drop in price, I got out. I had a bad feeling about them. I sold out, left them. I haven't looked back, but I know there's a few of you guys who are still in there. And after that earnings report, I know a lot more people have gotten out. If you're still holding and you want to diamond hand them, you can, but oh dear, I would still pay attention because I think there's still more pain. And even then you might be thinking, well, what more pain could there be left? So we're going to have to see how that all works out. But that's our good old friends, Algonquin. It's actually a shame because one of the first stock I ever bought was Fortis. But one of in my next little handful of stocks, Algonquin was in there. I used to love that stock. It used to be a staple in my portfolio. So they are no longer there anymore. And Wayne just said Algonquin CEO was showing the door. Absolutely, he was. Bad management. And I even hinted in my video that there was bad management there, and at least they're taking that step in the right direction. And Samer's in the house. Hello, guys, he says. Hello, Samer. Good to see you here. All right. Let's jump over to our next story. And the 2023 returns so far. I have an itchy nose for some reason today. I do not know why. So the Bank of America has just actually dropped some information I thought was really kind of interesting on what assets are making the most money in 2023. So the number one asset has been Bitcoin, of all things. Bitcoin right now, if you had bought it at the beginning of the year, you'd be up 54.5%. Holy banana bread. That's insane. Stocks have been up about 15%. Oil's been up 5.2%. Gold has been up 4.9%. And commodities have been up 3.8%. So that's just amazing. I'm blown away by the whole Bitcoin thing. And we're going to talk a little bit more about crypto in a little bit later. But good on you, Bitcoin. And those of you who bought in at the low, good on your portfolios, because that's not a bad return at all. 54.5%. Oh, wow. That's good. Let's move right into the next story. This is great. We're moving through the stories nice and fast. I do like it when that happens. All right. Let me see here. My next story is Amazon. Less boxy Amazon. So here's the funny thing about Amazon. I noticed during the pandemic, a lot of people started really ordering a lot of stuff on Amazon, but I noticed the boxes were unrealistically big. I know this one time I ordered basically 2 little things of instant coffee, and the box was about 10 times the size of it. I got this big box. I'm like, what did I didn't order anything big. And I opened it up, and all it was, well, bubble wrap and 2 little canisters, 2 little jars of coffee. I'm like, holy cow. So that has been one of the big issues. Now, there have been a lot of user feedback, and they've been telling Amazon, stop it. It's not good for the environment. It's probably costing you more to ship it. And Amazon, well, they're finally listening. So what they have decided to do is Amazon has decided to start using the original packaging for anything that they can. So we're looking at, in this case here, we're looking at roughly about 11% of their shipments now are not going to be in Amazon boxing. they're going to be in whatever box the item comes in. Now they're doing this. They said they're answering the complaints. That's great. But the other thing they're doing too is this is going to speed up their overall shipping process. And it's also going to cut back on some of their shipping costs, because one of their big goals, now this is a big goal in the US for now, but I imagine we'll see it in the bigger cities in Canada tomorrow maybe, but they want to do same day ordering. So, where in the morning you could come in, you could order something and the courier could drop it off to you later that afternoon. So that's one of the things, one of their goals in the US. And I think this is kind of a response to that more than them listening to customer complaints. Now, I did see another story as well, as there was a woman in Canada, and I can't remember exactly where, because this isn't technically part. I'm just remembering the story out of my head. Her house somehow, her address somehow got basically associated with an Amazon return number address. So all of these Amazon returns were getting shipped to her house. And she was being charged like duties and everything for things that were being shipping from the US. So she's trying to get that kind of fixed. But it's interesting the way the whole return thing goes with Amazon. There's a lot of returns. I don't know if it was CBC, but one of the Canadian news people did this thing where they had actually put trackers on some of their stuff to return. And some of the stuff ended up in landfills. Some of it ended up in just factories where nothing was ever going to happen. So it looks like a lot of the stuff that people return, even though it may be perfectly fine, are just getting, destroyed. And that's kind of not a good thing. So it's an interesting thing, the way the Amazon return system works. And I think what it comes down to for Amazon is that instead of shipping something back to the manufacturer and paying the shipping all over again, I think for them, it's just cheaper to destroy the object or the item. And that's kind of goes against being, being green, that's for sure. So that's kind of one of those interesting things. Sammer says, big boxes is good to my Brazilian stock. Kilbin 11. Okay, awesome. I'm not sure what Kilbin 11 is, but is it kilograms per kill? I don't know. Anyway, I try to decipher things. That's what I do. Now, let's talk a little bit about inflation. Here we go. Okay, we're moving. Got some good progress here today. All right, U.S. inflation. We had two reports that came out in the U.S. this week. We had their CPI, and we also had their PPI. So their consumer price index, inflation did tick up. It was 3% in June, and it ticked up to 3.2% in July. Now, the interesting thing is that the price of inflation was coming down right across the board, except for in one really big area, and that was shelter costs. Shelter costs have been in the U.S. 7.7%, and that's year over year. So that's kind of driving things in. And here's the other interesting thing when we start thinking about it, and this affects Canada as well. A lot of these drops in inflation were because we had a big drop in the price of oil. So, oil went down since about September into the new year. So that has helped inflation lower itself. So now as we move into the fall and the price of oil generally goes up, especially if we have a harder winter and things get colder faster this year, that could be a little bit of a driver of inflation. So just one of those things to keep in mind. Now with the PPI as well, it also showed a slight uptick in inflation, although for the most part, most of it was as expected, but more or less people are a little bit weary, and we still think that the Fed is going to probably hold or stay paused on the next rate hike cycle. But if we see another uptick again on the next CPI, then the rules may change a little bit. Let's hope not, because I think we've had enough of rate hikes for now. Okay. Oh, and Sammer says the company name Klabin. Oh, and KLBN is the ticker. See, I'm not familiar with them, but now that makes a lot more sense. Trying to actually pronounce ticker names is kind of funny. So we'll look at it that way. All right, let's move on to this next little story. Tim Hortons, they had their quarterly earnings report, and they did exceed expectations, which is great. Well, actually, it was RBI who had, because they're RBI owns Tim Hortons and Burger King, and Popeyes as well. They had theirs, and Tim Hortons, that aspect of the business really helped drive up that earnings report. Now, here's the interesting thing. Tim Hortons they had $2 billion in sales, in revenue, in Q2. And that is the first time they have ever done that. And one of the big drivers on that was cool drinks. So your chilled drinks. And here's the funny thing. People aren't just having chilled drinks anymore in the summer. Sometimes they're starting to drink them in the winter. Also, their lunches were up as well. And, let me see. Wayne has something. But before we do that, just a quick little banana bread here from 9. So Tim Hortons credit card. I can buy my gas and groceries with a Timmy's credit card. I don't know about the Tim Hortons credit card, but for some reason it kind of rings a bell, Wayne. I'm not 100% sure. Can anybody confirm if Tim Hortons now has a credit card? That would not surprise me. It really wouldn't. And yeah, that I don't know. But so yeah, Tim Hortons, their sales going well, going strong, helping to keep RBI in the green. All right. Now this next story is absolutely funny. Oh yeah, they do have a credit card. So Abalash and Muggsy, Tim's MasterCard. And Timsy says, yes, they do. Okay, interesting. I wonder if you get like Timbits back on the card, or instead of cash back. That'd be kind of funny. It's probably cash back though, if they have cash back. I mean, who doesn't have cash back on their cards nowadays? Yeah. All right. Let's jump to this next story, because this next story is awesome. All right. So a dairy farmer in Ontario has artificially inseminated 107 of his cows with some, we'll call it bull juice, that has a genetic trait that means that the cows, new baby cows, will basically, when they burp, they will burp less methane. So methane is actually a more efficient greenhouse gas than carbon, so it's bad. And burps are the top source of methane emissions from cattle. So this is really interesting. So apparently, by starting to adopt low methane burpers, we're looking at a reduction in Canada's cow methane contribution by initially 1.5% per year. But if we keep doing this, by 2030, we could be looking at by 2050, we could be looking at a 20 to 30% reduction in cow methane. So that's kind of interesting. Now, this is not all rosy, because apparently some dairy industry officials are unconvinced about low methane breeding. They say that it could lead to digestion problems. So I don't know. When I'm looking for stories, sometimes I'll run across one that is just absolutely bizarre. And this was that story. I was like, wow. So yeah, cows that burp less methane. So and here's the thing the story didn't tell me. Does it mean that they just burp less overall? Or is it the actual methane content of the burp that is lowered? So that part I don't know, but I'm going to assume it's going to be the actual methane portion. So I don't know what they're burping instead, but anyway, that is cows. And Wayne says, yes, explosive cow patties. Holy banana bread. I knew that was going to be a funny little one. Oh, and Muggsy says, and then people eat those cows. What then? True. But keep in mind, this is not like genetic manipulation. Well, it's not like, it's not like a GMO type situation. There are cows that already have genes for less methane when they burp. So they're just breeding. It's more selective breeding to try to, have cows have more of this type of cow. But I mean, if there's any kind of I don't know if there's any kind of a weakness in that genome, maybe that could be something that could be a problem down the line. But we'll have to see. right now it ticks all the right boxes for fighting against climate change. So we do have to give them that. So that's kind of an interesting thing. Okay. Our next story is actually kind of cool. And we talked earlier about Bitcoin and how, there was a lot of money to be made, like 54% upside on Bitcoin this year. Now, here's the other big interesting thing. We now have a situation where we've got a whole bunch of Bitcoin spot ETFs that have been put into the system down in the States, and the SEC has to rule on them. Now, so the Security and Exchange Commission, they were supposed to have a ruling on Kathy Wood's ARK Invest. They put in an application for a Bitcoin ETF. So they were supposed to have a ruling by, today. But what the SEC did is they've extended that deadline, and they've said this is what they want to do. They want to give the general public 3 weeks to weigh in on that proposal. In addition to that, they want another 5 weeks to respond to any initial slate of comments that come in. Okay, this is actually really good. If you think about it in the past, they've always just denied. This is really, really good, because here's what they said in their proposal when they wrote this up. They basically said, and I'll read this to you. This is quoted. So in sum, the exchange believes that this proposal is consistent with the requirements of Section 6, subsection B5 of the Act, that this filing sufficiently demonstrates that the CME Bitcoin futures market represents a regulated market of significant size, and that on the whole, the manipulation concerns previously articulated by the Commission are sufficiently mitigated to the point that they are outweighed by investor protection issues that would be resolved by approving this proposal. That's a good thing. That's actually positive verbiage that the SEC has given. So this could mean that once they've done those that other 8 weeks or so, this could mean that we could be on the verge of a spot Bitcoin ETF in the States. That will create a vehicle for people to invest in Bitcoin without actually holding it. And that could be very good for Bitcoin. So that's something just to keep in mind as we take a look at it. Back to the cows. Wayne says methane burgers. Holy banana bread. Yeah, that is kind of funny. So this is really, really interesting. Now, there's another 8 organizations that have filed applications as well. That includes BlackRock, Bitwise, Van Eck, and Wisdom Tree. So we're on the verge, and I think it's looking to me like Bitcoin is going to be there for Bitcoin. It looks to me like ARK Invest is going to be there first, and that will be huge. And I will tell you, if you are somebody who invests in Bitcoin or a Bitcoin adjacent thing, like maybe you've got a Bitcoin miner like Hut, or perhaps you are investing in like BTCY or something like that. That could be really good for your stock when this happens. So definitely something to take a look at. Now the SEC, like I said, they have denied all before. They do have some Bitcoin futures ETF. So but those there are kind of a different beast altogether, and they're not a true spot ETF. So this could be huge for crypto. So we'll have to see how that goes. All right, we got one final story. Ooh, let's get that out of the way. And then it's just us chatting about whatever you all want to chat about. I've never gotten through the news this fast before, but it's the summer. In the summer, I don't have as many people in the chat, so we don't have as much people, chatting along and asking questions. So, don't be shy. Ask any questions you want. We will address those as well. All right. So Canadian CPI projections. We got CPI coming out this week, and it's really interesting. Economists are actually expecting there to be a rise in inflation. So last month we had it falling to 2.8%, and I know people were like, yes, that's great. But it's actually thought that it may come in around 3.1% while we 3.1% while we're sort of going along. Now, This is not going to be a surprise to the Bank of Canada. Sorry, I was trying to say that, and I was reading what Ina just said about camping, and I have a funny story about that. So yeah, the Bank of Canada, this is not a surprise because they've kind of been expecting it to be around 3% plus minus a little bit, probably for about a year. So it is going to take a little bit of time. So from that, most economists are thinking there's not going to be a hike in September and that we're going to go into a pause, which is great. And, you know, we've already have seen some softening in the economy. So unemployment, that has started to rise. It's gone from 5 to 5.5%. So we're moving in the right direction. And well, according to the Bank of Canada, I never like to see people lose jobs, but you know, that should hopefully get things under control. Now, there are a smaller number of economists that say, well, maybe the Bank of Canada will just raise it again and say, let's just get this done sooner than later. I honestly don't think people could handle another rate hike. I would rather them go on a nice extended pause, give us a chance, because when you make rate hikes, it takes a while to filter in through the system. So I say, let all the stuff we've already done filter into the system. Let's see where we are at that point. Because right now people are just at a point where, especially as we start heading towards, for example, well, you know, people whose mortgages are starting to come up, they don't want the rates to go any higher. And we are heading towards a big lump of people who in the pandemic, you know, got themselves some good fixed rates. You know, we're coming up on them probably within a year. A lot of them are going to be at that point where all of a sudden they have to, you know, go from having a great rate to having a nice high rate, which is not good, especially if you couldn't basically, if you didn't have the money to do that from day one. All right. And Enid said, so people are camping. So that's actually funny. I mentioned that last week. I said, you know, hey, somebody's probably watching this on a campground. And then during the week, somebody actually did reply and said, yeah, I'm watching this on a campground. So I thought that was really, really cool. So maybe some more of you guys are at campgrounds right now, or you're watching it tomorrow morning at the campground. Because if you're at a campground right now, it's getting close to supper. You're probably, you know, busy getting the barbecue pit all ready and all of that fun stuff, you know, or maybe you're still swimming. I don't know. I know that, well, heck, if you're camping on the West Coast, you might hopefully have a fan, because I hear that there's a possibility of it actually getting up to 40 degrees in some parts of BC tomorrow. I'm like, holy banana bread, that's pretty hot. It has not been that bad here in at least Ontario, this part of Ontario. We've been getting a lot of storms, though. We get a lot of thunder, lightning, a lot of rain, or else it just misses. Sometimes, and it's funny, the other day, like, we had a storm that pretty much came in and it went right north of the part of the city we were in, that we live, and south at the same time. So it was like somehow this one little strip of area that didn't have any bad weather in it managed to completely run right across us. And I'm like, no, because I mean, I like storms. You know, I'm just one of those people, like, I think they're just cool. But oh well. We'll have to take a look. What do you think of DE.V earnings? I don't think they were that surprising. I know they went down a little bit after the earnings report, but I think they're still a good, solid company. I think they're going to be fine. I like what they hold. You know, in my 0 to 1,000 TFSA challenge, I did add DE, so I'm still confident about them, and I will certainly look at adding more. Maybe not this time around, but we'll have to see. I haven't decided yet on what stocks I'm going to be adding at the end. I have moved the money over already, though. We got the second 400 sitting in there, but I'm going to buy those pretty much right before I film that video. All right. Let's see. Banana bread camp. Holy cow. Yeah, that would be a good camp to go to. Oh, it would certainly smell nice. And Amanda's in the house. Hi, Amanda. How are you? And yeah, it's been a mild summer. Yeah, definitely. If you're in Ontario, I think it's been pretty mild here. Let's see. Mountain time for Mountain Finance is 2:29. Yes, absolutely. Yeah, that's one of the reasons. That's the thing. When I was deciding on the time to start the live stream on Sunday, I was like, well, let's I went with 4 o'clock because that way there people could sort of come in, catch the first hour before supper if they wanted to, at least here. The only people who I guess I'm very inconvenient for is people in Atlantic time, because if they have their supper at 5, they might be like, "Oh, damn you, Candace, I'm having supper now." But hopefully they're not too upset about that. But yeah, and then I think people all the way over to Vancouver, they get it quite a bit earlier. So nice little mid-afternoon or early afternoon for Vancouver. So let's see here. If the SEC allows for Bitcoin ETFs, I can see extreme volatility. Be very careful. How can you intrinsic value? Yeah, absolutely. It's right now, Bitcoin has had, I mean, there's still a bit of volatility in it, but it's been right down very, very low. And now myself, as somebody who likes to do some swing trading, a little bit of extra volatility might make a few different assets, Bitcoin related assets, a little bit more of a thing for me to make some money on, which is good. But yeah, definitely. Now it's an interesting thing when it comes to investing. Like a lot of people give into that whole FOMO FUD cycle. So you get a lot of people who are like, they jump into something, and because it's a volatile asset and it goes down, they start to fear, and then they sell it, and they've lost money at that point, and then it starts going back up, and they're like, oh my God, no, I'm missing out. They jump back in. So you don't want to be that person who does that. When you're looking, I mean, the best way to make money, and it's really interesting. I have a video coming out on Tuesday on basically some 5 stocks to basically buy and hold forever. And it's kind of one of those interesting things. I was looking at this whole theory of basically circling the wagon. So circling the wagon is a defensive strategy that is used sometimes in investing. It's sort of based off of the olden days when you had pioneers, whether, maybe they ran into a wolf pack, or maybe some native folk were attacking. They put their wagons in a circle because it was the best defendable position. So the wagons would basically provide a lot of cover for whatever was happening, especially if you had natives with, bow and arrows or rifles, depending on if they traded for them. It was just a way to protect yourself. So that's kind of an interesting idea. So with investing, the way that strategy works is that if you have those forever stocks, those foundation blue chippers, those are going to be the ones that are going to make you your money. They're going to be, tried and true. And if you just leave those alone, you buy them and you have your wagon, your circle of wagons, then those stocks will make up a lot of the money that you lose on bad choices. Because you take somebody like, you take any of the big investors, when you look at how many bad stocks they have, there's a lot. There's a lot of bad stocks. Everybody has them. But their difference is the people who have the billions of dollars, they've got their set. Basically, your wagons, they have them. They don't sell them. They don't take profits. They just let them build and build and build. So anyway, that's kind of what we're going to touch on Tuesday. So that's going to be kind of interesting. Jordan says, Dernoon, Candace, and all of the chat family. 9 comes in. Dividend ETF stocks make it easy to hold in the red. Yes, they can be. They certainly can be. Now, it's one of those interesting things. So people really, really, really fear the red. And it's kind of interesting when you get back to the whole idea of buying low, selling high. Well, the fact that you're buying low means you're buying red, and that's a good thing. So when the markets are red, so let's say you have your blue chip stock. So we'll pick, I don't know, let's just say you're invested in TELUS. So TELUS is a blue chip, but they're having some difficulty. So their stock has gone nice and red. It's down much lower than it should be. Well, that's when you should be buying it, not, going, oh my God, this is finally it. This is it for TELUS. They're finally done. Well, TELUS is not going to be done. I mean, they're a staple of, of the Canadian big three. So TELUS, Bell, Rogers, the three of them aren't going anywhere. Yeah, they may have to make some adjustments with Quebecor and Freedom making more of an inroads across the entire country, but they'll adapt. They'll still be profitable. They'll still make a ton of money. When you're, 10 years from now and you're looking back at, 2023, it'll just be a tiny little blip. You won't even probably can barely see it if you're looking at a 10-year chart. It might just be a little blip there, and then, everything's back to normal on its way up. It's the way stocks work. So those type of stocks, and usually when you look at the 10-year, and so many people don't look at the 10-year on their long-term investments. You always want to look at the 10-year. You want to see how it looks. You want to see that it's, if you've got pretty much almost a straight line going up, that's a good stock to buy and hold. Now, those of you who want the dividends, there's a lot of those that have half decent dividends. And here's the beautiful thing. When you got something like take the Bank of Nova Scotia, Scotiabank, when it's down as much as it currently is, you're getting a really crazy good yield on that. And that stock is going to rebound. It's going to make its way back up. Scotiabank is not going out of business. None of the big six are. I would be a little more worried when it comes to the banking sector and some of the issues we've had with banking. I would be worried with smaller banks. But even still, here we don't have a lot of crazy regional banks that, kind of like you have in the States. We've got a lot of the regional banks that are smaller, and they can certainly run into issues. I am afraid to buy more TELUS. Are we sure it will come back? It will come back eventually. It's going to be, and it depends on your scale, right? Now, I don't know how old you are, Enid, but if you were on the verge of retirement, so let's say you were 65 and you're looking just to get, some income flowing out of your accounts, then TELUS is probably not that stock for you. But now if you're like, 40 or, 30, 40, even 50, you've got plenty of time for that, for anything that's happening currently in the market, for that to sort of pull itself out. So there is time for that. Let's see here. Do you think it is a good time shorting oil right now? So WTI, folks, is the West Texas Intermediate. No, I don't think it's a good time to be shorting oil. And here's the thing. Last fall, oil had its drop, but the reason oil had their big drop is everybody was expecting cold winters. With the war in Ukraine, they were expecting to be a big shortage, but Europe got spared a cold winter. Europe ended up having a very mild winter last year, so the demand for oil fell dramatically, and that's a lot of what we've seen in that price. So we're going back into fall again, and this year I don't think we're going to get a second mild, but we might. If we do, then it might be a good idea. But for now, we're heading into a fall where it looks like it's going to be a normal winter. So that means there's going to be a higher demand for oil. And OPEC right now, the countries in OPEC that are already shorting the number of barrels they're producing have already said they're not going to up their their production. So I think right now shorting oil would be a risky play. So I would be very, very careful about that. Student John is in the house finally here. Hello, student. It is good to see you. And Brad says, is AQN like tea? So is Algonquin like TELUS? Should we wait it out or get out now? The time to get out was just before it all happened. That's when I got out. Now we're at a point where a lot of people are like, okay, they'll recover. Then they because they lost almost half of their value. Like they lost $5 billion in market value. That's not a minor thing. People were like, okay, let's wait it out. I'm sure they have a plan. And they did. They had a plan. It didn't work. They were going to buy Kentucky Power to add more regulation. They thought that might be a good idea, but it turns out it wasn't a good idea because it was only going to add more debt at that point. And now they've got to the point where they've announced that they're going to, before they did that, they cut their dividend in half, which was actually a smart move on their, as an investor, if you're holding their dividend, you're like, crap, they cut it in half. But it made sense. It was absolutely unsustainable. And it's still unsustainable in the state that they're in now. So here's the thing. Now they're selling off all of the renewable side of that company. So they're going to just be a regulated utility company. Here's the thing, at this point, we don't know what that's going to look like. We also don't know if they're going to get the market price for the renewables that they're trying to sell, because it's not the best time to be doing that right now. So it's hard to say whether or not you should get out. If it were me, I would probably get out and see if I could find somebody else who's on the rise that I could try to mitigate my loss that way. But that's only me. So you have to sort of make your own decision on that, Brad. It could be that maybe this new regulated company all of a sudden fixes everything. Now they did fire their chief officer guy, and that's a good thing, because I thought management really kind of faltered. Because I mean, here's a company, when the entire energy sector was booming, they weren't booming at all. So that is definitely interesting. Did you check out PRL Propel Holdings? I have not checked them out yet, Andrew, but I'm going to put this on my little after show thing here. PRL, I'm going to check those out right after the show. Okay, so Enid, you are 60. Okay. So here's the thing with TELUS. And this is kind of the way you have to look at it. So as a general rule, when you're going into retirement, you want to have higher dividend paying stocks. You don't want to have a lot of growth stocks because you don't have as much time to recover from them. But here's the thing. Oh, it started raining here. I really hope we get some thunder and lightning while we're still live. That would be the coolest thing ever. But we'll have to see. All right. So back to what you were saying. So where you're 60, you should be starting to think a little bit more towards some dividends. But here's the other thing too. You have to look at the size of your portfolio. You have to look at what type of situation you're going to be in when you hit retirement. So are you in a situation where you have some good pensions from a job, perhaps? Because you already have like your OAS, you have your CPP. You also have to look at, do you take your OAS at 65, or do you need it to be a little bit bigger? Same thing with CPP. Should you be taking it at, CPP, you can take it at 60 if you really want to. But it boils down to how well you've done with your investments, how you have them structured to determine whether you want to be very heavy on dividends coming in. Because if you don't have to touch any of that money, and especially if you have it all in your TFSA and you just want a nice, good income stream coming through, there's a way to structure it that way. And I'll definitely do some videos on that in the future, just to sort of help people out with how to structure it and whether or not, you should have a few more total return type stocks. Ideally, when you hit retirement, you want stocks, the bigger growth stocks. It would be ideal to have those like in your RRSP, because when that turns into an RRIF and you have to start pulling it out, at least if you get it to a point where you're growing as fast as you're pulling it out, at least initially, because initially it starts off slow where you're pulling out like about 5% a year. Then as you get older, you start pulling out bigger chunks. They force you to pull out. So that's just something to keep in mind with that. All right. Anyway, I will definitely do some more videos on that. Like right now, the most popular video on the channel is actually an OAS video I did. So I'm sure that those folks would love to see another thing in that vein. So let's make a plan for that. Wayne says, a hedge fund manager once told me if he could maintain a 30% success rate, he would win. He had experienced several drawdowns, but maintained a 30% annual return. Yes, absolutely. That is kind of what I was talking about with the covered wagon. So the covered wagons are going to be some really good stocks that are going to absolutely succeed. And if you were to look at every trade ever made by Berkshire Hathaway, for example, the majority of them are losers. But the big ones that they make they got the good chunks. They got a good amount of capital sitting in them, and they are making everything that they need. So they're covering their losses, and they're still well ahead. So there's a lot of different strategies in there. But as with this whole new series, the 1 to 100,000 TFSA, We're going to really break that down as we build it, as we move along, and that gets a little bit further down. So I'm looking really, really forward to that. Another interesting thing, I mentioned, I think before, that Robert Haney is doing a similar type thing. He's doing like $100 a week. I'm doing $400 a month. But there's a possibility the two of us may do an update together in the near future. So that's something to look out for. Hoping Value Village will be one of them blue chippers that I was in from the start. You know what? Here's the thing. I think Value Village is going to be, they're going to be one of these recession-proof stocks. I think they're going to be a good, I think they'll be a good buy. I think they're going to do well in the future. So yeah, I was happy to hear about them, that they were going to IPO, because that's, to me, I think that's a stock that people will buy all the time, just because a lot of people are frugal, and because of after inflation, even on the other side, when they get inflation under control, you've still created a bigger gap between the lower income people, even the middle income people, from everybody else. And things like Value Village are ideal. They're just ways that you can save some money. Although I will say, I think Value Village is a lot more expensive than they used to be, but still better than buying, buying new clothes, especially depending on what you're doing, right? Also great for Halloween stuff too. Let's see here. Bry Guys Adventure says, any suggestions on a gas oil ETF? Probably my favorite right now is XEG. So it's an iShares ETF. I've had some good success with them. So they'd be definitely worth your due diligence. But that tends to be the only, well, there's also ENCC if you want a covered call one. So ENCC, it's kind of the similar thing, but they do write covered calls on a percentage of that portfolio, and they have pretty good dividends on that. So that would be the two that I can think of right now. Chad says, yeah, I got out of AQN right before now. I got in when they dropped to $9, $10. Not a bad idea. Sometimes you have to take a loss. So many people, I've seen so many traders get into this mindset that I'm not going to sell at a loss. I'm not going to realize a loss. Sometimes it does make sense to get in to take that loss, move your money into something that's actually going to climb. Especially if you're in a company that right now, like AQN, for example, where they're going to go from here, I don't know. I don't know if this is going to fix things or if it's just going to make it worse. So to me, that uncertainty would be enough to make me do it. But that would just be that's how I would handle it. AQN is now a government. Yeah, they're moving. Once they've made their sale, everything will be government regulated. So what does that mean? What that means is that you're looking at a very stable stock. So you're looking at very low beta on a government. And even now they have a pretty low beta. That's what that does mean. So whatever they're going to be at the other side of this, I think they'll be a stable stock. I think they will be, they may not be a bad investment at that point, but where is that price going to be compared to where they are now? How much more market cap are they going to bleed in this whole process? Will they make enough money to pay off their debt by selling all of their, the renewable side? Those are the questions that we don't have answers to. And so those are the things that, if you're thinking of diamond handing it, those are the things you want to pay attention to, because that will be the ones, those will be the things that will decide, okay, I think I've diamond handed far enough in this situation. So just one of those things to keep me, to keep you guys going. OM Raw says, don't get me started on AQN, transferring what I got left to XEG. And I do like that XEG, absolutely. Can you please explain how the Well Health stock is moving so volatile? I don't get it. Amazing fundamentals, news, manipulation. It's one of these interesting things. Well should have done a lot better than it did, especially with the pandemic. And a lot of provinces loosening the rules on virtual medicine, for example. So I don't know why. I honestly, I don't know why it hasn't performed as well as it should have. But it has been, yeah, it has. Maybe there's manipulation that I don't know. but I'd have to dig a little bit deeper into their fundamentals at this point to give you a better answer. But I do know that they should have done a lot better than they already have. All right. Ooh, A loves my compliment. Loves my content. Thank you for the compliment. Thank you. Now I'm just waiting for B, C, D, E, and F to come in as well. Oh, that was really dumb. It says banana bread Hathaway. Yeah. Good old Berkshire Hathaway. And thanks a lot. Okay, hopefully I gave you a little bit, but we'll get that taken care of. Don't worry, Enid. I'm here for you guys. Let's see. Value Village. Watch out for the lockup period. Insiders sell at that point. Yeah, it's one of these things with IPOs. I normally don't jump into one immediately. And the reason I don't do that is that a lot of times they'll start at a higher price and then they will fall down quite a bit. And then they'll slowly begin to, to move back up. So I would rather wait till, and usually it's after that whole, after all the insiders have finished their buying, look at getting in a little bit later. But there's exceptions to that. But for the most part, it tends to work that way. Chad says, don't take a loss. Bought at, okay, that's good. That's really, really good then. And Verina's in the house. Hello, Verena. Good to see you. Any idea about Northwest Health? It also dropped quite a bit recently. I don't know about it yet, but I did add them to the pool for the pool that I pull the companies from when we do the voting. So I believe that we'll be doing a vote on them pretty soon so that I can do a full deep dive on them to see what's going on. Now, I know if I had to make a hypothesis, anytime you're looking at something in real estate right now with the raising rates, mortgages going up, things like that, there's definitely extra strain. But at the same time, when you're looking at healthcare properties, healthcare is a huge, huge thing right now. So I would have hoped that would have balanced it out. But hopefully when they come up on the boat, we can do them. I'd like to dig deeper into Northwest Health because I do like that REIT. Have you ever considered staking crypto? I have. I used to have a lot of Polkadot staked. But then, I started to get an uneasy feeling before the whole giant crash. So I kind of get out of crypto. But right now, I certainly will play with some crypto adjacent stocks because I find that pretty darn good. Have you ever made a video about best dividends explaining which are better for each situation? Thanks. Not in that exact way, but I think we're going to start digging into a bit more stuff like that because I got a lot of things planned for the channel, which I think are going to be pretty darn cool. So yeah, we'll definitely look into that. And I also want to look at which dividends are best for where you are on your personal journey. So for example, what type of dividends are better when you're looking at building a retirement portfolio versus what kind of dividends are better when you're a young whippersnapper ready to make your $1 billion on your way to retirement. So we got that. And we have AGZ over here. They have become a new channel member. Awesome sauce. Now, here's the beautiful thing. We have a exclusive live stream for channel members coming out. I believe it's this week. I think it's Thursday. So that's going to be a lot of fun. You'll be able to take a part in that. We're going to do a tier list. That's what everybody voted for. So we're going to do a tier list. So we're going to do like the S, A, B, C, D, F. We're going to take a bunch of Canadian stocks and we're all together going to sort them. I think actually Brandon Beavis did this on his live stream. I did a live stream with that not that long ago. And I looked at that and I thought that was awesome. So when somebody said, hey, you should do that, I was like, yes, I should. And it won the vote. So yeah, absolutely. Any of you who are not yet channel members, well, if you want to see that exclusive stuff, just drop the link below or, wait a minute. I'm prepared this week. I have actually made links for everything. So this here is the link for channel members. Sorry, there we go. to join the channel membership. Beautiful thing about it, you get to see everything I'm doing. You get a lot of input. When channel members ask for a deep dive, they get some extra weight when it comes to getting them into that list, into the vote. Now they don't get extra weight on the vote itself, just to which stocks go into it. So that's kind of good. And AJ says thank you, and you. SVV, I think it is. Can somebody confirm that? But I think. Now, I don't even know if that ticker has gone live yet. I think it's coming soon. Last I had heard. I haven't heard of it going live yet. And most of the stuff I follow would have said if it had gone live, I think. So I don't think it's live yet, but I could be wrong. OM Ra would know, I think. OM Ra, do we know when it's going, when the IPO is hitting on that one? That would be good to know. Like I said, I normally sit back and wait a little bit before I buy in. All right. And let's see here. Chad says, same with Canadian Tire. Took a hit from 180 to 158. Yikes. And I do like Canadian Tire. So, that's one of those awesome things. Let's see here. The stock video that you plan to release on Tuesday is Canadian or US? It is Canadian. So here's the thing. When I was looking at some of these stocks, I think that for the first one, I wanted to do it with Canadian stocks. I do want to do an American one as well, but I think most people kind of get the general gist of the American stocks. You got stocks like Microsoft, for example, Apple. Those are a couple of tech stocks that are going to be, that are pretty much there forever. Walmart's another good one in the US, Coca-Cola, McDonald's. Those are some stocks that you can buy and you can just hold them forever. But yeah, we're going to touch more on that, especially with the whole challenge, with the 0 to 100,000 TFSA challenge. I want to, I don't want to just sort of say, okay, here's what I'm buying. Bye-bye, everybody. Here it is this week or this month. I want to take the time to actually explain why I'm doing what I'm doing. And you'll see that with this one, like the first one I went in and I bought the 4. But this one here, we're going to actually start to break things down a little bit more, which is going to be fantastic. All right. But, there we go. So SVV is up. That's a good thing to know. And I haven't quite figured out what these red guys are yet. But 9, you'll have to let me know. Already up 7.52%. But not bad. There we go. It is now live. So SVV Savers Value Village Inc. closed at $25.73 USD on Friday. Nice. So US, it is a US stock. So one of those things to sort of keep in mind. Let's see here. Do you know of a concise weekly newsletter that covers both the US and you? Not together. Like myself, I pull a lot of my news from different sources. So I think for the US, I like to go through, I think it's a daily newsletter called Market Briefs. I have them send that to me every day. Canada, I use the Peak. And I also, of course, pull stories as I'm going through, whether it be Bloomberg or somebody else, I'll pull stories from them or different things I see in the week, because I'm constantly looking for news, because that's what really affects and drives the market, right? So when you pay attention to the news and you see something coming down, a lot of times you can then make moves that will benefit you big time. So for example, and I keep bringing this up, but YTSL, I sold before it decided to do its big old subterranean dive, and it hasn't really come back yet. But I'm kind of hoping that it stays nice and low for 30 days, because then I can buy back in at that point if I want to. But, I took a big profit on that one. But, I do like that. So, yeah, Wayne uses Bloomberg. Tim Danter from the Danter Banter and Tim and Nancy Danter's Crypto Night in Canada. He looks in Ola. No, just kidding. He's just saying hi. Now, normally, I know they're on hiatus for the summer, but hopefully they come back in the fall because I like to appear over on the Tim and Nancy Danter show, and that way there we just talk about whatever. It's a little bit less formatted than what we have here. And Routers, yeah, right. Routers is a great news organization. They have some good stuff, and they actually had a pretty good earnings report this week, if I recall correctly. So their TRI is their ticker symbol, so they did pretty well. Let's see, like Market Briefs. Yeah, exactly. And Market Briefs is pretty good. Market Briefs is run by, if you guys are ever on, of course you guys are on, I was going to say if you guys are ever on YouTube, like duh. But if you ever see Minority, I think it's Minority Investor or Minority Report. Anyway, it's a guy by the name of Minority something. He makes that, and he's pretty good and pretty thorough. So definitely like that. I like you like Pepsi over Coke. It's funny, some people are that way. It's like even when it comes to drinking beverages, like some people are like, I gotta have my Pepsi, and some people are like, I gotta have my Coke. And if you ever want to see the true definition of disappointment, hand a Pepsi to a Coke person or a Coke to a Pepsi person. It's sometimes it's funny. I've had friends where it's like they were ordering fast food and they were like, do you have the Pepsi stuff? And they're like, no, we only have Coke. And they're like, okay, I'm just going to go to a different order from a different place. I'm like, what the heck? It's like, I'm not a huge pop person. I do like, but I do like Coke products. But if I do have to go Pepsi, I'll go with like Dr. Pepper or something because I do like that. So it's just one of those things that you can keep your mind on. Did you see Wealthsimple has a 4% interest on cash holdings? What do you think about that? It's not a bad thing. If you need that sort of your emergency fund or something, you could put it in Wealthsimple Cash and get a 4% on it. That's not a bad thing. I would just double check, make sure that it's on the whole thing. I haven't read the fine terms of that. But yeah, and here's the thing too, though. If you think about it, 4% on Wealthsimple, it's probably still going to take you a couple of days to get it out. You might be better off just putting it in, depending on where you have room. If you don't want to mess around with your, if you don't want to mess around with your contribution room limits, you could always just drop it in your personal, put it in like an ETF like cash and get 5. I think they're up to 5.5% or something like that. It's either 5.25 or 5.5. I'm not sure if it went up after the last rate hike, but it should have. So that would be a better option, I think, just because you can liquidate that pretty fast. And it's not like these cash ETFs, they have like a bottom that they don't go below. So, that's not a bad thing. And let's see. Student John says, sold my SOT-UN. Yeah, I think a lot of people, REITs right now have kind of come down in popularity quite a bit. I remember, heck, in the last bull market, everybody was like, oh my God, I love my RioCan and every other REIT out there. Now, I'm in one REIT right now, and that is, I think it's one of the Slate ones, and I've just been waiting for it to, so what is it? SOR, something like that, or I don't know. I can't remember. I'm just waiting for it to get into the green, but I may have to take it at a loss. I've been looking at it and I'm like, oh, do I want to do that now? If the bull market comes, but the problem is that all of that interest rates, that's really impacting those. Let's see. I think you need premium for, that makes a difference right there. If you need the premium, that means that you need to either pay for it or have $100,000 balance in your account, because then you get it for free. Brian made it. Good to see you, Brian. Hopefully it's not too hot for you there on the West Coast. Okay, so what technical analysis do you use for swing trading? So for me, the form of swing trading I use, I mostly employ channels. So I'm looking for my resistance and support levels. And I look for basically an asset that's moving in kind of a zigzag between two of these supports, and then I will play it. Usually what I'll do is at the bottom. So let's just say it's moving from 10 to 20. Whatever. Well, this is a huge amount, but let's say it was going from $10 to $20, just going up and down. Well, I wouldn't buy it at 10. I'd probably buy it a little bit higher at 10, and then I would sell it just before it got to the 20. So basically about 10%. I sort of shrink that field a little bit, and then I usually just, wait, and I buy and sell, buy and sell, buy and sell. Sometimes though, you get into a situation where you get locked up because, it doesn't move fast enough. But if you've got a high enough volatility, so higher betas, then that does tend to work a little bit better. What is the ETF cash? It's CASH. That is the ETF. That is its ticker name. So yeah, just look it up. Look at it up. It is on Wealthsimple. Now, with those ETFs, like some of the cash ETFs, some of the banks don't have them because they have their own similar products, so they don't want to offer those ETFs on them. But I know you can get it on National Bank, and it's definitely in Wealthsimple. Oh, here we go. Horizon ETF cash. Every month it's reset to 50. Yeah, exactly. It resets to 50. Basically, it starts at about 50 cents on the $50 on the ex-dividend day. And then it slowly works its way up to, usually it's up around $50.10 around just before the new ex-dividend day. Cash ETF yield minus yield equals 4.39%. All right, let's see here. My second biggest acquisition this summer was Visa. I do not hold any Visa or MasterCard. And I'll tell you, it's not that I don't like them. I think part of it is that I kind of moved away from them when when I used to be a lot more into crypto. But now I keep thinking to myself, why don't I go back into Visa? Visa is a good company. They're making lots of interest right now, but at the same time, just like banks, they are going to be looking at record defaults as all of these interest rates and people taking on more and more debt comes to a head. So that's just something to be aware of. But when you're holding it for a long period of time, it's just a bump on the road. Let's see, stocks the company I mean. Okay. No, premium is 4.5. Okay, there we go. 4% is for all users. Okay, okay. High interest savings account. Do you use Keltner channels? Right now I don't. I like to manually do it. Now, sometimes I will use, even though I like the channel, sometimes I'll see like an obvious pennant signal, or I might see a Head and Shoulders popping up, and I may play those. But for now, yeah, I just like to keep it nice and simple because I don't want to do a lot of maintenance with the swing trading, because part of the whole reason for going with swing trading opposed to day trading is that it gives me more time for the channel, more time to do stuff. Like yesterday, I actually built a thing out in the backyard for the cats. So it's a great big structure that they can go in, and they got little they got tiered things on the side of it. So that's, one of those nice little things. Let's see, 4% at 100,000. What are your opinions on swing trading blue chip stocks? Is it a stress-free approach? It can be, but here's the thing though. When you are doing something like that, the higher the stock costs. So when you get stocks that are big, so for example, let's say if you want to swing trade Microsoft, well, you're not going to make a lot of money unless you buy an absolute insane amount. So you need a lot of capital to be able to do it that way. Whereas if you're looking at smaller stocks, so let's say you're doing a swing trade on something like, let's say, for example, it looks like that Bitcoin spot ETF is a done deal and everything is positive, and you're like, oh, I want to do a swing trade on that. Well, you could do something like HUT. So HUT in Canadian right now, it's about, I think it's like $4 and something. So you don't have to use as big of an investment to get a bigger return on it. So it's one of those things that you can do. It's just something to keep in mind when you are doing it. So the downside is that there's a little bit more risk when you're looking at smaller stocks because they don't have that. They don't have as deep a pockets as some of the bigger ones, but it depends on the ones that you're looking at. Um, you kind of have to play it. Now with swing trading, though, the nice thing is you do have time to recover from something. So if something falls down, um, and it's not, it's because of the market. It's not because of like bad management or bad fundamentals on that stock. It's probably still going to come back up. Things will sometimes break out of a channel, and you will sometimes have that happen. So at that point, you have to decide. So if you've got everything tied up into a stock and it's in a channel, well, when you're hitting a channel, right, the longer you're in that channel, the higher the percentage that it's going to break out of the channel, either to the downside or the upside. If it's the upside, then woohoo, you've made a bunch of extra money. Well, maybe, because if you've already got it set up and you're actually sitting there and you're using like a limit sell, then it's probably going to trigger that on the way up. And you're not going to gain any of that breakout. But if you happen to be sitting there and you're kind of watching it live and you don't have a limit sell on there and it breaks up, then yeah, you're in great shape. Same idea when it breaks down, you probably want to have some kind of a stop loss if you can. So you have to kind of look at that. All right. Let's see. They used to offer 4% on 100K, but now they offer it to everyone. Okay, that's kind of cool. Can holding too much cash be a mistake? You wait for the right opportunity, but earlier you start, the more you do better. How much cash would you hold for the right opportunity? Well, boils down to what your goals are. The minority mindset. Thank you, Enid. The best way that you can, approach how you're going to do is set up some kind of a dollar cost averaging, because when you dollar cost average, I know people love, like everybody loves those words, buy the dip, buy the dip. So if there's a dip, maybe buy a bit more then. But if you're looking at a good long-term strategy, simply doing a dollar cost average scenario means that you're going to buy, sometimes you're going to buy it a little higher, sometimes you're going to buy it a little lower. Most times you're probably going to buy it in the middle, but it means that you're getting the fair price for that over longer periods of time. So then you don't have to have that stress of trying to, and I've seen this, I've seen people, stack a whole bunch of cash and they're waiting and they're waiting and they're waiting. And they're like, oh no, I'm sure the market's going to go lower, but it doesn't. And then by the time they finally dawns on them that, oh my, okay, the market's not going lower, it's too late. And, if they had been doing a dollar cost average, then they would get a piece of that lower market as well as some of the higher markets. So it is a better way to go. But it's one of those situations where if you're sitting on cash, you just have to remember that cash is not making money. It's just sitting there. It's deflating. So if you're, it doesn't hurt to have like a budget that you can sit on. Like, let's say, for example, you want to invest, let's say you're doing $1,000 a week. I'll say every 2 weeks you're investing $1,000. Doesn't mean you have to run in there on payday and say, oh, yeah, look at the market. It's pretty high today. I'm just going to throw it all in right now. Well, you can always do a dollar cost average through the week, because when you look at the week, most weeks we have some red days, we have some green days, red days. Probably helps if I do the right hand animations for the way the market's moving. So it doesn't hurt to do a dollar cost average across it. Like I know Tim Danter, who was in here earlier, he's been doing a dollar cost average on Bitcoin all year. And, all the Bitcoin he bought at the beginning of the year is up 54%. So that's not too shabby. All right. And then, yeah, Minority Mindset was the one who does market briefs. Let's see. Chad says, Jizzy, it's time in the market, not timing the markets. Yeah, it's exactly that. See, HUT is on a downtrend, closed at 398 on Friday. So yeah, and that's the thing. HUT will be down. Now, here's the funny thing. We also have with Bitcoin coming up in 2024, we've got the halvening. So there's going to be a lot of interesting stuff, I think. And we'll talk more about that as we get a little bit closer to it. Let's see here. HUT releases their financials this week. So that'll be interesting to see. I think now this is just me. Do your own due diligence on this, but I will probably dump a little bit into HUT before their financials come out, because Bitcoin has been moving up. For the most part, these guys have been doing well. Don't remember, when you're looking at these financials, they're Q2. So they end at, the end of June. So just because they faltered a little bit here towards the end of in August. It's the end of the end of July. So yeah, January, February, March, April, May, June. No, the end of June. So the end of June is when it ends. So keep in mind, any faltering they've had lately is not going to be reflected on these earnings. That's a mistake I've seen people do where they'll just open up the chart and they'll look, and even if it's a Q2 earnings, they might be looking at what's happened at the beginning of Q3 and put that into it. That should not be a part at all. All right, Evanite's in the house. Hello, Vanite. And Wayne shorted Hut on July 17th when it broke down through $5. Oh, then you're doing well, Wayne, on that move. Shorting oil. I just increased my position in freehold royalties. I love FRU. FRU is a nice little stock. I have a good position in that as well. Richard from Montreal is in the house. Hi, Richard. It is great to see you. And I think I'll sell my AQN. Not a bad idea. Not a bad idea at all. That's what I would do. I know some people want a diamond hand and see what happens. But I think selling it's not a bad idea at all. Okay, so coming up this week, as I said, we have 5 stocks on Tuesday that are hold forever stocks. On Thursday, and I haven't looked yet, but last I saw, I believe it was Pizza in the lead. So that's looking to be like the company who we're going to be doing that deep dive on. Always remember, guys, if you want to say on what deep dive I'm going to do, one, throw the company names at me, especially on my community tab. Then I can put those into the pool. So that way there, we'll get to yours eventually. And vote. Be sure to vote. If you throw the name of your favorite company at me, but then you don't vote for them, they may not make it. So you always want to be voting on that community tab. And those of you who are community members, we, of course, will have, we're going to do the tier thing on the live stream that we're doing on a Thursday night. And that is going to be fantastically fun. And yeah, Pizza is so volatile, but good for dollar cost averaging. Yeah, they are. And they're a royalty company, too. A lot of the restaurant companies are royalty. So that I find is pretty darn cool. And what else do we got going on? I think that's about it for this week. I don't think I have anything else happening. Oh, yeah. There you go. Your monthly dividend pizza. I love that. That is kind of good. Extra dividends on my pizza, please. That would be fantastic. All right, everybody. This is it. We're at the end of this show. Thank you guys all for being here on this fantastic Sunday afternoon. We'll be back here, of course, next week. We'll do this all over again. And, have a great week. Summer's coming to an end, so enjoy it before we are done. All right, everybody. Take care. We will see